trying to make sense of the equipment finance market can sometimes feel like, well, like you're staring into a crystal ball, right?
Yeah, I can see that.
But today, we're ditching the guesswork and getting down to brass tacks with economic indicators. Think of it as like our decoder ring for what's coming next in the industry.
It's like having a superpower, wouldn't you say?
Yeah.
You can peek behind the curtain, get a feel for the economy's rhythm, and if you know how to read the signs, well, you can really anticipate the market's next move.
I like the way you think.
Yeah.
And that's exactly what we're doing today, diving into understanding economic indicators and their impact on the equipment finance industry from the rate card. It's really a fantastic, almost like a cheat sheet, really.
It is. It's a great primer.
And you know me, I'm all about a good primer. So let's jump right in with, I guess, what you'd call the heavy hitters, the big, broad economic indicators that always seem to be making headlines. Where do we even begin?
Well, a good place to start is always the Industrial Production Index, the IPI.
Okay, the IPI, got it. And what does that tell us exactly?
So the IPI, that's like the pulse of our factories. When you see a higher IPI, it usually means more output, more stuff being made, and usually that translates into, you guessed it, a need for more equipment.
Okay, so let's say, just for example, the IPI is going through the roof for, I don't know, car manufacturers. Does that mean it's time to call up every car factory in sight?
Well, hold your horses. It's not quite as simple as that, but you're definitely thinking in the right direction. A high IPI in a specific industry, like car manufacturing, that's a big, flashing neon sign telling you to pay attention. It could mean those companies are expanding, upgrading, maybe even looking to finance some brand new equipment.
Makes sense. So we're keeping an eye on the IPI to see which industries are like really heating up. What's the next clue in our economic detective case?
All right, so we've got the factories humming along, but what about the overall sentiment, the vibe of the market? That's where the Purchasing Managers Index comes in, the PMI.
Okay, the PMI. Fill me in.
Think of it like, a barometer. It measures how confident manufacturers are feeling. If the PMI is above 50, that generally means things are looking optimistic, good growth all around.
So if we're looking at, say, the furniture manufacturing world, and we see a high PMI,
You can bet those furniture makers are feeling pretty good about the future.
Yeah.
And what do people do when they're feeling confident? They invest. New saws, fancy lathes, maybe even some high-tech automation. It's a green light for equipment financing for sure.
I'm starting to see the bigger picture here. These indicators, they're like puzzle pieces, aren't they? And we're putting them all together to see exactly what's driving the equipment finance market.
Exactly. And just like a puzzle, some pieces are more obvious than others. We've covered some of those big, attention-grabbing pieces today, but believe me, there are plenty more clues to uncover.
Well, don't leave us hanging.
Don't worry. We'll be back to dig into those more granular insights. We're just getting started.
All right, so we've got a handle on the overall economic picture, right?
Yeah.
But how do we, zoom in a little, get into the specifics of different industries?
You're right, because financing, say, a robotic arm for a car factory, it's a whole different ballgame than financing a new oven for, a bakery.
Exactly. So how do we tailor our approach?
Well, the article dives into some really great industry-specific indicators. Things start to get a little more granular. For example, they talk about business investment in equipment, and honestly, this one's huge.
Yeah, that seems pretty straightforward, right? Companies putting their money where their growth is?
Exactly. It's all about seeing where the action is. Let's say construction equipment purchases suddenly spike.
Oh, I see where you're going with this.
Right. That's not just a coincidence. It means construction companies are feeling really good about new projects. And you know what new projects mean. A need for financing. New equipment financing, to be precise.
I'm telling you, this is fascinating. It's like we're putting together a puzzle. All these indicators are like pieces. And the more pieces we find, the clearer the whole picture of the equipment finance market becomes.
And here's another big piece of the puzzle. Non-residential construction spending. This is where things get really interesting.
Okay, so break that down for me. What exactly does that cover?
So we're talking big projects, offices, factories, warehouses, all those large-scale construction projects that require a ton of equipment.
It's like all those cranes you see on the skyline, right?
Right.
Like those massive new skyscrapers going up, which I guess also means some old buildings are coming down somewhere.
Exactly. And all of that, it signals a healthy appetite for long-term growth, right?
Definitely.
And that long-term vision, well, that translates directly into big-ticket equipment purchases.
Mm-hmm.
And of course, you guessed it, financing. Now, let's shift gears for a sec, move away from construction and talk about another big player in all this, interest rates.
Ah, interest rates. The double-edged sword.
Right. It can really make or break the party. When interest rates are lower, borrowing becomes more attractive, so naturally, businesses are more likely to take out those loans, especially for equipment upgrades. It's like when you have a sale on, oh, I don't know, tractors, suddenly every farmer wants to trade in their old one.
I totally get it. So basically, we're saying that keeping a close eye on interest rates is crucial because it can really impact the entire ecosystem of equipment financing.
Absolutely.
Yeah.
But remember, it's not just the big players that matter. The smaller businesses play a crucial role too.
Right. Those small businesses, they're the backbone. Right. So how do we factor them into all of this?
That's where the Small Business Optimism Index comes in. It's a fantastic indicator, really gives you a sense of the temperature among Main Street businesses.
Okay, so let's say we're seeing a lot of optimism from maybe restaurant owners.
Perfect example. High optimism among restaurant owners. That could easily translate to a surge in demand for new kitchen equipment. Think about it. Small businesses are often much quicker to adapt and respond to changes in the economy, making them a really dynamic force in the equipment finance world.
It's like comparing a swarm of speedboats to a giant cargo ship, right?
Exactly.
Both are important to the overall picture, but they move so differently. Okay, so far we've covered broad indicators, industry specifics, and the never-ending saga of interest rates. What else should we be keeping in mind? What am I missing here? It's amazing how much information we've packed into this deep dive already, but I get the feeling we've only scratched the surface of this economic treasure map.
Oh, absolutely. There are always more layers to uncover, more clues to guide us.
So, where do we even go from here? What other economic breadcrumbs are we following?
Well, we talked about those broad sectors like construction and manufacturing, right? But the beauty of this is we can get even more specific. The article highlights what they call niche signals. Think of them as like little whispers in the market that can be incredibly valuable if you know how to listen.
Ooh, I love a good whisper. Give me an example. What kind of niche signals are we talking about?
All right, take agricultural equipment sales. That's a good one. It gives us a direct line, a clear view into what's happening in the farming industry. So if tractor sales are through the roof, that tells you farmers are feeling good about things, feeling good about the harvest, investing in their operations.
Which means more financing deals, more shiny new tractors hitting the fields.
Exactly. It's a chain reaction. And there's so many other niche areas we can look at, like transportation equipment orders. That's another really interesting one.
Okay, I'm intrigued. Tell me more about this one.
So imagine you start seeing this massive surge in orders for, say, cargo ships.
Cargo ships. Okay, now we're talking.
All right, big stuff. But it's not random. A surge in cargo ship orders. That tells you something's up. It usually means global trade is booming, things are moving.
And someone's financing those massive ships. That's a whole other conversation right there. So we're watching these niche indicators to understand what's happening in specific sectors. But what about those big picture investments, those big purchases that tell us about overall economic confidence?
You're talking about capital goods orders. The article calls them out as a major indicator of long-term economic health.
Capital goods. So what falls under that umbrella?
We're talking big machinery, heavy-duty industrial equipment. Those purchases, they signify something really important. A belief in continued growth and stability. Companies aren't going to drop millions on a giant mining drill unless they're feeling really good about the future.
It's like a huge vote of confidence, a bet on the future.
Exactly. And these big bets, these massive purchases, they often come with equally massive financing needs. It's a critical part of the equipment finance world.
This is incredible. We've gone from big picture indicators to super specific signals. We've really covered a lot of ground. As we wrap up, what's the key takeaway? What should our listeners be thinking about after they finish listening to this deep dive?
At the end of the day, it all comes down to this. Understanding these indicators, these clues, it gives you a real edge. Whether you're in finance, sales, or just want to sound smart at your next dinner party, this knowledge is power. It's about connecting the dots, recognizing the patterns, and using that insight to navigate this crazy world of equipment finance.
I love it. It's like we've unlocked a secret code. We can see the dominoes lining up, understand how each economic indicator can impact everything else.
Exactly. And who knows? Maybe you'll even be the one predicting the next big wave.
To our listeners, the next time you catch a headline about, the PMI taking a dip or a surge in capital goods orders, remember what we talked about today?
Yeah.
Don't just glance over those headlines. Think about them. Connect the dots. You might just uncover a golden opportunity in the exciting world of equipment finance.